Hi, welcome back to my channel. Today we're going to address the pros and cons for buying a home in 2024. There are no indication home prices will be coming down in the next few years. And perhaps you're hoping for a significant decrease in interest rates. While interest rates dropped steadily over the past 7 weeks, averaging 6.61% for a 30-year fixed rate mortgage, we have seen an uptick in interest rates since last week. Today's interest rate is at 6.75%, making homes less affordable than last week. Can you see how quickly affordability can change? There's too much flexibility in interest rates, but home prices, on the other hand, continue increasing. Now let's address home price depreciation, which so many would-be buyers are hoping for. No other phrase can define the 2023 housing market as much as the mortgage lock-in effect, a phenomenon that brought the industry to a standstill, putting downward pressure on everything from inventory levels to home sales. The pandemic era sub 5% mortgage rates that 85% of mortgage holders are locked into are keeping homeowners from selling their home only to buy another home at an elevated interest rate. Housing experts do not foresee home prices in Central Florida decreasing, and neither do I, especially not in Seminole County. Home prices in Central Florida are projected to increase again in 2024 and into 2025, albeit not in double digits, nevertheless making homes more expensive. While there are other areas in Florida that are decreasing, Central Florida is not one of those areas. Hi, my name is Evelyn Malave, broker associate with Remax Town & Country. If you're thinking of purchasing or selling a home, it would be my honor to be your realtor of choice. Overall, there are pros and cons to both buying a home now and waiting to do so. If you have enough for a down payment and income to afford a mortgage now, you might benefit from locking in a home at today's price and start enjoying the benefits of home ownership. We have too much pent-up buyer demand in Central Florida. If interest rates do come down significantly, buyers will rush into the market. Competition will be fierce, wiping away any inventory gain. I have no doubt we will go into the crazy home buyer frenzy market we experienced in 2021 and 2022, when buyers were paying tens of thousands of dollars above asking price to secure a home. They waived appraisal, inspections, and allowed sellers to stay in the home rent-free for months and months after closing. Some housing experts may advise you to wait, save more money, and apply towards your down payment. However, my opinion is that you purchase a home as soon as you think you're ready. Purchase a home you can comfortably afford without the expectations of refinancing into a lower interest rate, not one that will leave you financially strapped. Refinancing is expensive and does not always make sense. The U.S. economy is an unknown territory, given mass post-crisis government stimulus spending and historical low interest rates. So even the best market oracles don't know how interest rates will play out. In fact, I strongly suggest you purchase a home at least $50,000 less than what the lender qualifies you for. Let's say a lender qualifies you for a $500,000 mortgage. I suggest you don't go over $450,000. Or if they say you qualify for a $5,000 monthly payment, I suggest you don't go over $4,500 a month. In other words, don't purchase up to your qualification amount. When a lender qualifies you, they use your gross income, not your take-home pay. They also don't take into account your monthly bills, like your cell phone payments, auto insurance, utilities, daycare, groceries, and so on. After a lender tells you how much of a house payment you qualify for, you then have to come back in and add in all these bills and determine if you want to proceed with that high of a mortgage payment. If you're not sure how to start the process, please reach out to me for a free consultation. It doesn't matter if you think you'll be ready in 30 days or 3 years from now. Call me either way. Let's get you ready for home ownership. Speak with a few lenders sooner than later, and make sure one of those lenders is a credit union. You may have to let a few lenders run your credit report. The 3 credit reporting agencies know people shop for mortgages, so more than one mortgage-related inquiry in a 30-day window should not hurt your credit score. So many critical loan approval factors are built into your credit report. So often buyers tell me they don't want a lender to run their credit, but it needs to be done. This is the only way they can determine if you're ready to purchase now or will you have to fix some credit issues. Your outstanding debt and income will determine how much of a mortgage you qualify for, and the interest rate is predicated on your credit score and how much money you're putting down. Credit reports reflect current balances on most of your debts, and these balances can impact qualification. Credit reports also show any derogatory items on your credit history, including creditor mistakes you may not know about. Most lenders can help you with these issues. That's why pulling credit should be first in process. The lender will ask you questions about your job, income, and assets. They will also ask you to provide a full financial profile along with pay stubs, tax returns, and bank statements. You need to be completely transparent with the lender. You will have to tell them all about your financial situation. All banks approve loans based on your debt to income ratios. Debts come from credit reports and tax returns, and income comes from pay stubs, tax returns, and bank statements. Provide this documentation right away, even if the lender is too busy to call you for it. The only exception to this rule is if the lender has told you the program they're putting you into does not require any documentation. It's not enough for your credit score and debt to income ratio to qualify you, but the home must also appraise high enough to cover the loan you're requesting. When a lender quotes you an interest rate, it could be very tricky. Most buyers don't know how to decipher lender lingo. For example, rate buy downs, points, escrow, and so on. There is a direct relationship between interest rates and fees, and some lenders have exorbitant fees while others have very little fees. Like credit unions, always insist on a full written term sheet, one which clearly displays interest rates, the term of the loan, and a line-by-line breakdown explaining all your closing costs and how much you will need to bring to the closing table. Also request a detailed breakdown of what your monthly payments will be after closing. Lenders are required by federal law to give you a 3-page good faith estimate. But this form is a joke because it leaves out so much of what your closing costs are going to be, only to surprise you the day of closing. This is why I suggest speaking with a few lenders. Make sure to request this breakdown from each lender you speak with. It's the only way to make an informed decision. Closing takes about 30 days if you're getting a conventional loan. If you're getting a VA or an FHA loan, that could take about 45 days to close. And you don't need to put 20% down. In fact, you can purchase a home with as little as 3.5% down. After you speak with the lender, they will determine which program is best for you. If you're thinking of purchasing a home, call me. We can put together a plan, a short-term or long-term plan, whichever works for you. I've been selling homes in and around Central Florida since 1989, and I'm very familiar with the entire buying process. Below, I will link the calendar for upcoming events in Winter Springs, and I'll also give you the link to animal services. They're always in need for volunteers and donations. And thank you for coming back to my channel. Bye for now and be safe.